Snap is famous for disappearing messages, digital filters, and Bitmoji, but cracking it open reveals a different operation. Underneath the bright yellow interface is a complex financial architecture built to support nearly 500 million daily users. Surviving in the digital advertising sector means going head-to-head with trillion-dollar tech titans who dominate screen time and ad budgets. It is a brutal arena where small players are often squeezed out. For years, Wall Street looked at Snap and saw a cash-burning social app. The prevailing narrative was that they were incapable of reaching sustained profitability while competing against those massive platforms. This is a supplemental financial sheet from Snap's second quarter 2026 earnings report. This exact grid of numbers suggests a shift in that narrative. We are going to audit this data. Before we dissect the money, we have to look at the foundation holding it all up. Snap's survival is currently tied to a massive, entrenched global audience. This chart maps Snap's daily active users. Look at the upward climb of these yellow bars starting from 2025, reaching 493 million people daily by Q2 2026. Shifting to the dark gray bars, rest of the world climbed to 303 million, outpacing domestic growth. This creates an immediate tension. International users in these emerging markets are historically the hardest to monetize, largely due to lower regional ad rates and inconsistent network connectivity. Snap has solved the problem of acquiring a massive global audience. The real test of this turnaround is whether they can extract actual financial value from such a sprawling footprint. The answer shows up on the top line. In Q2 2026, revenue hit $1.59 billion. That is a year-over-year surge of 19% from the $1.34 billion they posted the prior year. This graph isolates North American average revenue per user. Snap is extracting $10.26 per user, a 23% jump. Now, pull up the rest of world chart. The reality is $1 per user, growing at 4%. They are actively maneuvering to handle that risk. They used cash to repay their 2026 notes, while simultaneously issuing new debt due in 2034, extending their financial runway. Then they moved to reward shareholders. In this quarter, they bought back 49 million shares of their own stock, a move that consolidates equity. So where is the excess capital going next? It's being funneled into Specs Inc., their hardware subsidiary dedicated to augmented reality and wearable technology. The strategy is clear. Their debt management and share buybacks are designed to buy the time needed to fund a high-risk gamble into AR hardware. We can tie this analysis back to the ultimate indicator of financial health, free cash flow. This is the cash left over after a company pays for its operations and capital investments. This chart shows Snap's free cash flow. From $24 million in Q2 2025, it surged 407% to $121 million in the second quarter of 2026. This financial shift is happening in a market where competitors constantly attempt to clone Snap's core features. It is a high-stakes environment where any sign of weakness is exploited. Through cost control, rising revenue per user, and strategic repurchases, they are moving away from the volatility that defined their early years. This audit shows a company that has stabilized its core business. By converting a massive global footprint into surging free cash flow, Snap has secured the capital required to dictate its own trajectory.